Hello traders, Cousin Vinny coming to you from theclosingprint.com, May 15th, 2022. In this edition of your weekend video newsletter, we'll discuss the indices, all of which fell for another week. We did see a bounce on Thursday and Friday, with FANG stocks lower, with most of our indicators neutral, bullish 7 indicators, neutral 5 indicators, and bearish 8 indicators. Heat maps are giving us more of an improving look for the S&P 500 spider sectors, and the international sector is improving somewhat as well. Bulkowski is also flashing an 88.9% bullish indicator, while the S&P 500 managed to bounce back above support at 4,000. This week we'll be looking for the bounce that we saw on Thursday and Friday in many stocks across many sectors to continue. Until then, we'll reduce our risk and hedge where appropriate. The S&P 500 did bounce last week. On Thursday and Friday, we saw a follow-through. The number of stocks trading above their 50-day moving average had slipped to 15%, which meant 85% of stocks below their 50-day. We're looking for a bullish signal this week. And to be clear, the most I'm looking for is a dead cat bounce back into this descending pattern. With that dead cat bounce, we're also watching valuations on the S&P 500, which have been shifting lower from the peak in 2021, currently at 20.34 for the S&P 500. With many stocks showing signs of a bounce on Thursday and Friday that might follow through this week, might being the operative word. We'll look for that on Monday and Tuesday. Suffice to say, valuations have come in quite a lot, especially on hyper growth names. As the valuations in stocks pull back, especially in those hyper growth names, it is remarkable to note that in the last week we saw inflows into RK of over $534 million. The fifth straight week of inflows as price action continues to move lower. We did see that bounce on Thursday and Friday. So remarkable to note and something to keep an eye on this week. It's also worth noting that the S&P 500 reached 20% drawdown from the January highs to the Thursday low before reversing, while the NASDAQ 100 Qs also hit minus 30% from the highs in November down to the Thursday low. We're watching very closely S&P 500, the Qs, and IWM this week. Our hedge of choice, QID, is flat for the week, pulling back to where it started on Monday. Any move lower would probably start to pull some of that hedge back, as we keep an eye on the potential strength of this dead cat bounce that we're anticipating this week. The same thing goes for IWM. We had a hedge going into the week, which we've reduced the size on the bounce that we saw last week, off more than 30% on the recent drawdown, as we look for a move back towards the descending 10 EMA on this weekly time frame. As we start the week, we do have a bullish signal on VIX, and when this is green, we're looking for higher highs and higher lows on this 60-minute time frame. Starting the week with a descent in the VIX VXV ratio, we're watching for that to continue lower as well. In addition to VIVIX, the volatility of VIX, which has been dropping off, that tends to be a reason to look for a bounce. We did have a blue elder stick on the S&P 500. In addition, cycles are starting to turn. This is the Dow Industrials looking for a turn in the green zone, while we watch the Wilshire 5000, an even broader measure of market participation, looking for this to turn as well. It's in the green zone, starting to see signs of a cycle bottom. In addition, breadth is something that we want to see improve in the S&P 500 in the middle panel. Mid caps, small caps, and the NASDAQ all bounced last week from extreme levels near minus 30%. That usually lasts for a few days or weeks as more stocks are bought from extreme levels. With valuations pulling back to more reasonable levels, this dead cat bounce that I'm looking for seems more plausible in the short term. Bond ETFs have also started seeing inflows over the last week. As the indicator suggests, bonds are becoming a little bit more in favor versus equities. As we can see with TLT weekly, we had a little bounce, a little selling into strength, but trying to base here. And with yields working the opposite of bonds, we did see a pullback over the last week. Perhaps we're starting to base at 3%, something that Arthur Hill had talked about over at Stock Charts a couple of weeks ago. Again, there's a reference point of the late 70s inflation, where the 10-year yield was up there at 16, 17%. Right now, we're at 3% inside of this range, looking for consolidation. We did break the trend in the recent move higher. It's the speed of the move that's freaking everybody out, and the hikes that the Fed has indicated this year. The takeaway here being watch bonds and yields. If yields start to pull in a little bit, we might see more inflows into the bond market. In addition, one of our neutral to bearish indicators is high yield corporate debt, with any bounce viewed as bullish and any acceleration lower viewed as bearish for equities. The same goes for junk bonds. As junk bonds rise, that would be deemed bullish for equities. As they move lower, that would be bearish for equities. We also watch other risk assets like IBB, biotechs. Those turned higher last week, in addition to IWM. Crude oil, usually we'd like to see this a little bit lower in the case of inflation, but that's rising as well. Bitcoin trying to bottom, and advanced decline turning higher. So we've got 4 of 6 of these indicators more bullish. 2 are neutral to bearish. In addition, we see a strong US dollar, which is putting pressure on some commodities like precious metals, gold and silver, both of which continue to show weakness. As a hedge or safety trade, these haven't worked very well. The dollar has been the only one that's worked well. Together with gold and silver, copper has also pulled back. This is a leading economic indicator. We'd like to see this bounce. That would be good for home construction, builders, and related industries. For now, these have more of a bullish indication, along with the rise in Brent crude on this weekly time frame continues to put pressure on household spending. So at this point, higher is more bearish for equities, lower it would be more bullish for equities in the short term. Finally, with all of the geopolitical risk, we're still seeing strength in the CRB index. Commodities continue to rise as supply can't meet demand. Ending the week, we did see improvement in sectors as we saw a bounce on Thursday and Friday, with some strength in tech, internet, and technology, as well as large cap, small cap biotechs, and home builders, media, and retail. Improvement across the board, not as much red, more yellows, greens, and oranges. Same goes for international indices, all of them improving, turning more yellow and lime green, looking for more improvement in the next couple of weeks. S&P 500 sectors, most have bounced on Thursday and Friday. We're looking for a mean reversion back to the 21-day and the 50-day overhead, blue and red respectively. We had fewer stocks this week showing up on the IBD 50. Some of these stocks showing relative strength at highs and stocks that were breaking out. Looking for those to follow through this week, in addition to stocks that showed up on our scans. Of note, some of these had flow in terms of volume. price action reversal on Thursday and Friday, and also had options volume coupled with inflows that suggested that we could see a follow through this week. So make sure you check these out. We'll go over a few of these now. Among the IBD 50, we have AZPN, BECN, Beacon Roofing. We're watching for construction names to perhaps get a bounce and move back above the 21 and the 50-day moving averages. Beacon Roofing is above both as we watch for a bounce and a follow through. Moving averages are climbing and RSI is back above 50. Volume started to creep in on Thursday and Friday, and we see a cycle in stochastics more bullish for the short term. We also noted that CF Industry and the fertilizer stocks all look like they were getting bought up. To start the week, we followed through on Tuesday, Wednesday, Thursday, moved above the 50-day on Friday, so I'm watching for either a consolidation in this area below this pivot and a follow through to 52-week highs. In addition to the whole group moving together, with Intrepid Potash pulling back more severely, showing a reversal potential here as well. Mosaic looking for a pushback above the 50-day, RSI back above 50 as well. And Nutrien from previous watch lists, here again we'd like to see above this volume by price bands over here on the left, and the 50-day this week, RSI back above 50. With many of these IBD 50 stocks following through, you can see Synovus Energy, many of the energy names following through as well, looking for continuation. Darling Ingredients looking for a pushback above the 21-day. We got that on Friday. Looking for a continuation. Devon Energy looking for a follow through here. Pushback above the 21-day. We bounced 2 weeks ago. We followed through on Thursday into Friday. Pharmaceutical stocks, we're looking for Eli Lilly to continue higher this week, get back above 300, perhaps test that 310 level. Hershey's looking for a follow through here as well. Hess looking very strong. High Peak Energy, many of these names look good, so make sure you check your favorite energy stocks. They all bounced on Wednesday, Thursday, followed through on Friday. Merck with recent commentary last week, following through on Wednesday, Thursday, testing that 91 level. Have a target of right around 96 to 97 on this one, as a swing from last week on the breakout above recent highs. Murphy USA looking for a follow through here as well. Penske Automotive breaking out on Friday on volume. With autos being expensive, Ritchie Brothers Automotive Auctioneers having a nice bounce last week. Thursday got back above the 200-day on Friday, looking for a push above these volume by price bands. Continuation. I wouldn't chase it, most likely going to flag right in this area. That said, look for strength to continue. Related names like General Motors got a lot of chatter last week. Institutional buying, looking for a push. Looking for other names like Nikola, NKLA. That one got some buying action on Thursday and Friday, looking for continuation this week and a move back towards the 50-day. 21-day first resistance and this level of support that was lost a week ago, coming back to that level, most likely resistance. Look for volume to continue. We saw flows in options across multiple strikes as well as stock volume flow. Look for Nikola to continue higher. Ryder Systems and a lot of these rental names watching for continuation. Ryder popped on volume on Friday, well above average, showing institutions have been picking up shares. Watch for a breakout this week. Titan International, TWI, back on the IBD 50. Haven't seen this one in a while. The company manufactures wheels, tires, and undercarriage systems and components for off-highway vehicles used in the agriculture, earth-moving, construction, and consumer segments. This looks pretty bullish. It had a good earnings report on May the 2nd. Company beat and grew revenue by 37.8% year over year. They beat by 15 cents. The estimate was for about 29 cents per share. They came in at 44 cents per share. Looking for a continuation in Titan International, TWI. Ulta Beauty also showing up on the IBD 50. Ulta scheduled to release earnings on May 26th, 2 weeks from now, Thursday after the close. With their previous report, they beat earnings. They grew revenue by 24.1% year over year. Looking for this bounce to continue. Obvious activity here, RSI moving back above 50, volume picking up, MACD turning, stochastics rising. Maybe it gets some upgrades going into earnings. That would be a reason for me to take some profits, reporting 2 weeks from now on May 26 after the close. Zim Integrated had a nice bounce last week. I believe Ali's still in this one. Congratulations. Looking for a follow through. We got higher lows, looking for a higher high and a takeout of this pivot at 67.23. If we do see that, we'll look for this upper Keltner band and this 74 level in the short term. Also check out the names in this list, especially the ones that are breaking out and stocks from the scan. Those are showing activity both in flows for shares as well as option volume going into this week. Of particular note were some of the Chinese names that saw continuous buying last week as well, and some of these stocks that have pulled back quite a bit: Palantir, Redfin, SoFi, and TAL, which, like some of these Chinese names, continues to see higher highs and higher lows. Turning the corner. Momo, same thing. And Baozun, looking for these to break above the 50-day moving average in the short term. And Redfin, which showed a lot of activity last week, looking for this bounce to continue. Still in a descending pattern, something that new members need to pay attention to. Whenever you see price below the 9, 21, and 50-day, and all three are moving lower, that's said to be in a markdown or phase 4. It's not until you see a base, which is starting to build here along this volume by price line, that you start to look for phase 1 accumulation, leading to phase 2, where we want to be long as price action moves higher. The 9, 21, and 50-day flatten out and start to turn up and to the right. Those are the things you should be looking for in the short term. At the same time, you want to be reducing risk and hedging where necessary. If the markets don't follow through with a dead cat bounce this week as we're expecting, then we need to be cautious and wait for institutions to do all of the heavy lifting. Going into this week, we're still reducing our exposure to equity markets. I'm down at 47% now. Exposure to equities. At this peak, I was 79% long in equities. Started reducing our exposure over 7 weeks ago. Into last week, we saw a hammer, so there's a possibility we could get a follow through this week. Most I'm looking forward to be very clear, is a dead cat bounce back up to the overhead moving averages. The trend is still down, and until we break to the upside above the 50-day and out of this pattern, we have to go with the trend. So that's going to do it for me. This is Cousin Vinny coming to you from theclosingprint.com with your weekend video newsletter. I'll send out a watch list later tonight around 12 midnight on the East Coast, around 9 o'clock on the West Coast. So be sure to check your inbox for that. Otherwise, enjoy your weekend, take care, and I'll see you in the morning.